Welcome to Charity Therapy, the podcast where we explore the ups and downs of the nonprofit sector and answer your burning questions. I'm your host, Jess Birkin, owner of Birkin Law Office, and I'm excited you're here. Imagine hanging out with me and my super smart, funny nonprofit expert pals. You get to ask them anything about your nitty-gritty nonprofit life and get their wisdom for free. Whether you're a seasoned pro or just strapping on your nonprofit boots, we're here to share stories and remind you you're not alone on this journey. So get ready to join the conversation and bring me the tough questions. I ain't scared. Ready to rock? Let's dive in. Hello and welcome to this episode of Charity Therapy. I am back with Meghan.
Hello, I am here with Jess since you didn't introduce yourself.
Why was that delay?
Because I really thought you had more to say and then you didn't. But that's fine. We can just,
I don't know.
It's bare minimum.
It's a day. It's a day. I started this day trading barbs with my teenager Max, and he called me a chud.
Whenever you say that, I just keep thinking it sounds like a slur of some kind. So I keep being like, no. And then it's like, oh, no, it's not actually. It's not a compliment, but you're not saying anything like worse than dummy or something.
I don't even know. I don't even know, because I'm of the era that Chuds was a horror movie and Chud stood for cannibalistic humanoid underground dweller, I think. And it was like I believe the loose plot of this movie was that, like, in the sewers of New York City, there were these creepy things that probably they reach out of the sewers and grab your ankles or something. I don't know. I've never seen the movie, but it's like lore. It's like lore. And so then I'm like, why is my 17-year-old using the word chud? Because ain't no way that Max understands the reference.
He has no idea. He has no idea. Now I need to go find it and watch this movie. Like, do you have the sense? Obviously, you haven't seen it, but is this like genuine horror movie or like B-side terrible horror that's really funny?
Yeah. So I think let's take horror in the loosest possible terms, like Attack of the Killer Tomatoes level horror.
Which also I've never heard of, and that sounds incredible. So,
it's literally a quote unquote horror movie where people are mowed down by giant tomatoes.
Great.
So, I don't think you can be that scared watching a movie where, and remember, this is like the 70s. So the special effects are quite special. Just like a trick of the lens with like a giant tomato, and probably like a big red piece of cloth, like trying to be shoved inside of a door or something. And people being like, no, not the tomatoes.
Oh, I'm so ready. I need to go watch this.
This is like what horror used to. Yes, like this is what used to be, and we need to go back to that. Yep. Like there was the Attack of the Lycanthropes or something, which was like a giant rabbits. Giant. Right? Yeah. So like they just film a rabbit, but then they like layer on a person in the frame. And because rabbits are a little terrifying. If
they really are. Big. When you see them yawn and you realize what their teeth look like, you're like, oh my God. And I know this courtesy, Jess, of your rabbits when I watched them. And when Gigi used to yawn, I was like, this is horrifying. Like, you are scary. I did not know.
So, I mean, I'm just saying we need to go back to that era of horror, because the whole like gore porn thing, I'm just like, no, that's gross. I want giant tomatoes chasing people and the sound of like squishing fruit being the scary part.
If there's any horror movie buffs listening, please like come at us with some recommendations, because I see a bad horror movie marathon in our future. So
love that.
Come at us.
That. Okay. What are we actually doing?
We're now talking about actually, this one is not even the horrors. This is not the horrors of nonprofit life. In fact, today we're talking about good things for the most part, which we love. It's a good change of pace sometimes. But today we're talking about a question from a startup, someone who just started a new nonprofit. And before we get into the question, Jess, I wanted to talk to you a little bit about what it looks like to start a nonprofit, because people often reach out and are surprised to hear how much money and time it takes to actually create the nonprofit before they can even start applying for grants and doing all of the things. And so, what does it like? How do people pay for this? Like, what does it look like? What do they need to have in place in order to start a nonprofit?
I mean, it does kind of depend. I mean, there are the people who go to the LegalZoom and get some templates filed for them for free, basically. For low cost of like $500, you can have the state's free form filed for you at a ripoff price.
Yep.
But if you're going to do it well and you're going to do it right and you're going to actually have documents that meet the requirements of the IRS and your state and nonprofit best practices, it probably looks at least like hiring somebody, getting a service from somewhere, and then it's going to cost money, right? Whether you are legal zooming it or hiring me or somewhere in between, it's not free. And I think that's the main thing is people are like, but we're going to be a charity. That's great. But a charity is just a business that has a special income tax status, and it's going to need insurance. It needs accounting. It needs legal advice, and fundraising is going to take time and may require some expertise. You need a website. You need all these things, right? And so I think people don't really realize that they're starting a company.
Yeah.
And all of the things that go with that.
When I talk to people out front, there's often this sort of like, well, we're going to fundraise to cover all of the costs, but we need a nonprofit in order to fundraise, or we need to, I have this like grant I'm looking at that will be able to cover this, but like, what do we do until then? And there's this sort of chicken and egg problem of like, I need the nonprofit to get the money, but then I need the money to get the nonprofit. And people get stuck in this problem for a long time before they're actually ready to start anything.
Yeah. So that's the thing is like, you have to spend, what's the saying? You got to spend money to make money.
Yep.
You do have to like put some money in before that tax exempt status comes. And frequently that is the founder. That is usually our passionate person who wants to do the thing.
Mm-hmm. Yeah. And it looks a little different depending on the entity. Like sometimes it's just an individual person. Sometimes it's a group of people pooling their resources. Sometimes another organization wants to help them out or something like that. There's a million ways that this happens, but like you got to get money from somewhere, and it's not going to be some big government grant given to you as a lowly individual with an idea. Like it's going to be smaller and scrappier than that. Okay, so I have a question from just this kind of founder. So, Jess, are you ready to talk about their question?
Hit me.
Okay. In June of 2025, two friends and I created a scrappy little housing placement nonprofit. We all put some of our own money into the bank in June to help make it happen, and we earned our official 501c3 tax designation from the IRS that September. Does that startup cash we each contributed count as a tax-deductible charitable donation, even though it happened before our 501c3 status?
Okay, great question. First of all, a couple of things. June, September, right? So there's some of that chicken and the egg, right? Because it takes months just to even
and
the
frankly,
smallest.
That's fast. Yeah.
Yeah, exactly. I'm guessing that they probably didn't spend a lot of time making bylaws, and they probably did the quick and dirty application. 3 months is not that long, but it is time. And so there it is, case in point. I want to give them props for opening a bank account for the nonprofit and putting the money into the bank. Good job. Sometimes we talk to people who are like, I just have this money in my personal checking. Like, no, that's not correct. So good work. So then the question really is, what about the money that you contributed to the nonprofit before you had the income tax exemption? What gives? Is it deductible? What's happening? So there's this nice feature that the IRS knows you have this chicken and egg problem. And they also know that they are, shall we say, not the fastest agency that exists in the world.
Understatement of the year.
Right. So as long as you apply for income tax exemption within the first 2 years, and technically it's 27 months, but within that first 2 years of incorporation, from the minute you sign up with the state to say, we're going to have a nonprofit entity, if you seek income tax exemption in that first 2-year window, the IRS will say, hey, good job getting it to us. Sorry it took us so long. We're going to backdate your income tax exemption all the way to the day you first incorporated, which basically kind of does like the Spiritus Sancti papal blessing on all of the money that went into the nonprofit's bank account, and sort of like retroactively, in a sense, makes that deductible. Now, the wrinkle here, though, is, yeah, you got a 2-year window, but you're going to be filing your taxes before that. So ideally, if you are getting your income tax exemption, you're not waiting 2 years, because you've already filed your taxes. You can't really claim it as a deduction because there was no C3 status. So you do want to try and hurry up. Hurry up and get it done, basically, so that you can, if you qualify for a deduction, which is a whole other thing, whether it actually counts for you or not is a thing between you and your CPA. But as long as you've got that income tax exemption before April 15th, everything that happened over the past year is good, golden. It all counts because of that IRS backdating.
And I just want to bring up, because I hear about this from founders in a couple of ways. Like, this is one major way that founders choose to fund the beginning of the nonprofit is, I'm just going to put my own money into it and I will take a, deduction on my taxes if it makes sense, but I am just donating my money basically to get this up and running. We also sometimes see founders who ask the board to vote and have the nonprofit pay them back, basically. So even though the nonprofit didn't exist with funds at this time, the board votes and says, hey, like, you fronted the nonprofit this cash, we are going to reimburse you and take it on as an expense of the nonprofit and not your individual costs. But that also depends on the nonprofit having the money to do that.
Right. Because the board has to decide that it's in the best interest of the organization to reimburse those expenses that whoever, the founder, one of the initial board members, incurred. 9 times out of 10, I don't know why it wouldn't be. So that's going to be fine. But you do have to have a board vote at a board meeting and say, here are the expenses. I'd like to be reimbursed. And you cannot, like, in year 1, I said this was a donation and now I took a deduction. And now in year 2, now that we got our status, well, now I would like to be reimbursed. No, that's called tax fraud, people. Yes. So you need to decide what you're going to do, at least before your tax filing is coming up, because you can't go back later. If you already claimed it as a deduction, as a gift, as a contribution, there's no takebacks, as we would say in the 80s.
Yeah, exactly. So, I mean, good news for this person, like, yes, the answer is yes. Like, your contributions count and you can work with your own tax professional about what that looks like for you. But the IRS would consider that donation to be, to a tax-exempt, charity that you can take a deduction for. Okay, I have a couple of takeaways here for us in this conversation. So first, I think the big one is that nonprofits are businesses and all businesses have startup costs. So it will cost money to start a nonprofit, and likely money out of your own pocket. Despite the fact that you can fundraise and raise money for nonprofits down the line, it's a little unlikely you're going to get a lot of money in the door just to do the initial filings. So if you are a hopeful nonprofit founder, keep that in mind and remember that you're going to need a chunk of change to work with before you can even get started on being a fully tax-exempt nonprofit. Secondly, when you do apply for tax-exempt status, if you do it within a certain window of 27 months, the IRS, when they approve your application, will also backdate your tax-exempt status to the day you started the nonprofit, the day you incorporated it. So anything that did happen in that meantime is considered at a tax-exempt entity, and that is how, you can donate your money for those startup costs. And then finally, nope, there's not a third one. That was it. I was really confident there was a third one. Just the two. That's all I got.
I think the finally is no double dipping. You can't take a deduction 1 year and get paid back the next year. So just keep that in mind.
Yes.
All right, folks, if you enjoyed this episode, do me a favor, share it with a friend, rate, review, subscribe. If you know a founder who thinks they're going to start a nonprofit and they need a little reality check, you can share this one with them. If you've got a question or a story to share, please get at us. We would love to hear from you. Send us a note online at charitytherapy.show. And as always, thanks for listening.